Hey everybody, Joe Brunsman here, back with another cyber insurance and cybersecurity law video for you. This time we're going to be talking about cyber deductibles, a lot of those hidden considerations that your insurance guy either didn't know to tell you or failed to mention, and why those considerations could end up costing you a lot more money than you anticipated, even multiples of your deductible. So let's get into it. All right, first of all, let's talk about why you should care. Well, obviously, this is not a particularly sexy or exciting topic as far as that goes in the cyber insurance and cybersecurity law world. However, you have to pick a deductible at some point. So everyone who's going to get a cyber policy, or they have an endorsement, or they're contemplating it, you're going to have to pick a deductible. Now, a lot of times businesses would just kind of, I'd say honestly assume that their insurance guy is going to say, hey, pick this lower deductible. And they're thinking in their minds, oh, well, obviously, if I pick a lower deductible, that means that the premium's higher. That means his commission goes up. And it can also be really a point of contention among business owners and various stakeholders in that organization on what that particular deductible should be. But there's actually a lot more to the story and some hidden considerations I think every business owner needs to know about before they really jump into this topic. Now, before we really get into the nitty gritty here, I want to explain the difference between deductibles and retentions. Now, generally, it's not actually that big of a deal for most SMBs. It really only matters when you have a large deductible. Now, obviously, you need to read your policy first. Sometimes it says deductible, but it acts like retention. Generally, if it says retention, it's going to act like a retention. But you never really know until you get into that policy language. So here's an example for you. Let's say you have $1 million limit and you have a $5,000 deductible. Well, something happens, you pay that $5,000 deductible. You actually only have $995,000 remaining of that limit. So you're actually paying the first $5,000 of the $1 million. That's what a deductible means. Now, if you have a retention, let's go back to our example. Something happens, you pay your $5,000 retention with $1 million policy, you still have $1 million overlaying that. And that's why I said at the beginning that it's not generally that big of a deal unless you're trying to carry a very large deductible, but you have to read your own policy. Now, obviously, higher deductibles equals lower premium. And I understand that no business has infinite amounts of cash. So obviously the price is always going to be some factor in that consideration, but there's other points of consideration you need to realize. The higher your deductible is, obviously the less risk you're transferring to the insurance company, right? And insurance is a risk transference mechanism, and the more risk you're retaining for yourself. So don't necessarily think about it in dollars. Think about it in terms of how much risk are you trying to transfer, or how much risk are you trying to retain? Also, there is a point of diminishing returns. So generally it's in your best interest, even if you think, hey, we can handle a $50,000 deductible, start looking at those lower deductibles, because depending upon how those actuaries defined what the final premium is supposed to be, right, what goes into that rate, sometimes you'll see that, hey, cutting your deductible in half really has a negligible or immaterial effect on the premium price. So don't burn yourself there. And just remember that, cyber insurance for most businesses, it's already, quite affordable compared to the majority of insurance products out there. So don't get too wound up in this higher deductible, lower premium. But of course, there's way more to consider here, and let's talk about that. First, you need to think about, okay, what happens if we get breached multiple times? If you're a small business and you're like, okay, well, if I can save $10 by going from a $10,000 premium to a $50,000 premium, you could end up burning yourself. Now, what are the odds of a multiple breach in a year for any business? I have no idea, and I don't think anybody in the world has any idea, because it likely depends on thousands of different factors that nobody really has insight into. And you also have to think that if you have to pay that deductible multiple times in a year, you don't want to put your business in financial harm or financial straits, because that could really come back to bite you. So you took something you thought was going to help you. Now, all of a sudden, it's becoming kind of a burden here, really because we wanted to save a little bit of money on the front end, but now it turns out that you end up costing yourself way more money on the back end. Also, let's think about those sublimits here. Now, every policy is structured differently, but don't forget about these little sublimits. Many times I will see someone will send me some cyber policy that they bought from, some general agent guy, and they'll go, hey, tell me what you think here. And a lot of times you'll see this huge deductible to try and push that price down. And it effectively makes some of those sublimits useless. Often this will happen in that like social engineering, wire fraud, payment fraud type arena, where some policies will have these smaller sublimits. Now, let's say you have a $50,000 sublimit on social engineering. And for this, for this presentation, we'll just say that just happens to cover everything where somebody in your company transferred money to the wrong person, just as an example. Well, if you have, say, a $10,000 deductible on your policy, well, now every time that they spend or they send less than $10,000 out the door, you're just paying for that out of pocket every single time. So don't make your sublimits useless. Next consideration here, and this is really getting into like master's level insurance stuff. This is something called an other insurance clause. Now, what's the original purpose? The original purpose had to do with moral hazards for insurance companies. So obviously, the insurance industry didn't want to put themselves in a position where, for example, you could buy 3 different homeowners policies, your house burns down, and then in return, you get 3 times the value of your house back. That's not what they really wanted to incentivize in the insurance industry. So how does that really tie in with cyber insurance? Well, sometimes you're just going to have overlapping policies, or you're going to have multiple different policies that could potentially respond depending upon how that claim plays out. Sometimes you're not going to know. So let's say you're a large healthcare organization, or better yet, you're an accounting firm, you're a large accounting firm, and you don't know if someone's going to sue you following a breach because you lost all their PII. Well, here's an example of an other insurance clause from a cyber policy. And essentially what this says is, hey, this cyber policy is great, but if you have a different policy that covers this, this will only act in excess. So that means that your first policy has to, you have to burn through all those limits, doing whatever, and then the cyber policy would come into play. Well, here's an other insurance clause from a professional liability. And this says the exact same thing. Hey, this is excess to any other policy you have that would cover the costs that you're trying to claim under this policy. So now you have 2 policies you thought would respond, and each of those policies has these other insurance clauses, and they're going, hey, we're excess to the other. Now, obviously, that's not fair to the policyholder who maybe didn't contemplate this, or they're not sophisticated enough to have legal counsel come in and explain all this to them. So the courts have dealt with this, because you don't want to end up in this endless loop where the policyholder never has the insurance they thought they paid for. And it's this circle of each insurance company just emailing themselves back and forth for eternity saying, hey, it's not me, it's you. So how do they deal with that? Well, that's something called a mutually repugnant other insurance clause, or MROIC for short, if you're a fan of the acronyms out there. And once again, these come into play when you could have coverage in multiple areas across different policies. As I said before, sometimes you just can't get around this. Sometimes legal counsel will say, hey, you need to report this to multiple policies. We don't know how this is going to play out. You could have multiple coverages across different policies. And you have to be careful, because sometimes, I do see a lot of insurance companies out there. They're all trying to hop on this cyber insurance bandwagon. So they're all slapping on these like little minor endorsements all over the place. You can see them on homeowners policies. You can see them on professional liability policies, D&O policies, RIA, E&O policies, et cetera, et cetera, et cetera, as well as just having a standalone cyber policy that generally has higher limits, more appropriate for the business. So what does that really mean? How does this play out? Well, there's really no good answer to this. First off, it's going to depend upon your specific jurisdiction. But you should be prepared to possibly pay multiple deductibles. So if we go back to that accounting firm example, let's say part of the claim is covered under the accounting firm policy and the professional liability policy, and part of the claim is covered under the cyber insurance policy. Well, you may end up paying part or all of both deductibles on those policies, and then the insurance companies then prorate their particular exposure depending upon the costs that are laid out from there. So Another reason why you don't necessarily want to have some monster deductible on your cyber insurance policy, because you could end up paying more deductibles than you actually anticipated when you bought that policy. And there's not really a lot legally you can do about that. Now, there are kind of some ways around this, or some things you can do to try and mitigate that risk, and those are generally called mandatory endorsements. This here is an example that I pulled out from a cyber insurance policy. And once again, it has that other insurance clause. It says, the insurance under this policy shall apply in excess of any other valid and collectible insurance, ... provided that this policy shall be primary solely with respect to breach response services, cyber extortion loss, and data recovery costs covered under the breach response and first party loss insurance agreement. So this policy is essentially saying, hey, if it has to do with breach response services, cyber extortions, that'd be like generally ransomware, this policy is going to be primary, everything else is going to be excess. And then they conclude with that little clause at the bottom, the existence of other insurance available to an insured shall not affect the underwriter's obligations toward an insured in paying loss covered in this policy, nor shall it delay payment of such loss. So a little bit of kind of extra cushioning there for the insured. All right, so finally, let's kind of wrap up here with some considerations. So first of all, don't be penny wise and pound foolish. Don't end up burning yourself. Second, war game these scenarios so you can set aside the appropriate amount of cash necessary if there's just no way around potentially paying multiple deductibles. You don't want to bankrupt your company via insurance. That's not a good way to go down. So war game those different scenarios. Obviously, read your own policy, figure out how all this could interplay, seek legal counsel if you ever have, really deep concerns or really any concerns at all. I obviously always recommend that for everybody. If you do have a good insurance guy, you may want to think about bringing him into that war game scenario so he can assist you with how, he thinks this may play out, give you some different considerations as well. And with that, this is a copy of my book. If you thoroughly enjoyed this presentation, you can download it for free here. That's the PDF version. If you would like a physical copy or a Kindle version, you can find it on Amazon. With that, stay safe. Oh, wait, like, share, and subscribe. Keep your friends safe. Stay safe now.